After the Russian Federation dissolved, it was unipolar world run by America only. But now we can see it's not bipolar, it's almost a multipolar world, which America is not comfortable. They will soon recognize that they have to act, they should not act funny most of the time. We should not surrender to Trump. We should do whatever is great for the country in the long term. Short termism, we should never think. We are a big country, we are the large economy. It's not a physical war, it's not a bomb. Nobody is bombing us. It's a stupid trade war. We can survive that.
Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. The latest trade numbers released by the government reveal that India's trade deficit with China has clocked a lifetime high. It stopped just short of $100 billion. Not only have India's imports grown from China, but its exports to the country have slowed. In the last 5 years, India's imports from China have grown by as much as 60%. And worryingly, most of these are in intermediate products. Further, China packs enormous economic muscle. Not only is it the world's second largest economy, it has also inserted itself in a key position in the global supply chains. Not only as a supplier of intermediate products, but also by controlling the processes of green minerals. As a result, it has a virtual stranglehold on the production of products like electric vehicles, solar cells, and so on. So, if we go to the logical conclusion of this, China, if it chooses to weaponize its trade, it can do so to deadly effect. The obvious question then is India's economic sovereignty at stake? To answer this question and to explore options before India, we have in our studio today Ajay Srivastava. He is the founder of the Delhi-based think tank Global Trade Research Institute and a previous guest on the show. And also, if I may add, one of the finest trade experts I know. Welcome, Ajay.
Thank you, Anilji. Thanks for inviting me.
Ajay, I want to cut to the chase. The introduction, I broadly spelt out this trade deficit problem with China. I saw a LinkedIn post by you, and you said this trade deficit is a structural warning. Why did you say that?
So, Anilji, people in India generally feel that we buy too much of electronics from China. But when I did a detailed data analysis, then I was shocked. That's the only word that can say about my surprise. If we talk about imports from China, 98% of imports from China, they are industrial goods. And if we divide all the industrial goods in 8 categories, China is the largest supplier in each of those categories. It's not only electronics, it's not only machinery, it's all the 8 categories: chemicals, electronics, textiles, clothing, leather. Everywhere, whatever we import, China is the largest supplier to India. So we say it's not electronics. Since China is the largest supplier in all the 8 industrial goods, there is a problem that we are too much dependent on one country. And then there are certain products, like you mentioned, where our dependent is more than critical. For example, biologics, we buy almost 90% from China. Chemical based API 70% from China. EV batteries, almost everything. Solar panel, almost everything. So we are too much dependent on China.
So obvious question, is India's economic sovereignty at stake?
I will not use that word economic sovereignty at stake, but we are critically dependent on China on many products, and we should work out to cut that dependence.
So tell me, Ajay, given the face-off that we are witnessing between the US and China, the situation is probably going to go from bad to worse. So the risk is that China will start now diverting its exports to other countries. And India, given its dependency on China, is a probable target. So, how does India cope with this potential threat of Chinese exports into India?
So now US has imposed very high tariffs on China, up to say 250%, and other countries is 10%. This is for 90 days. We don't know when Mr. Trump is going to change this, but suppose this continues for some time, then three streams of developments right now they are taking shape in India and other countries. First, people will try to buy from China, will bring the goods from China and exports to US as their own country goods. For example, an Indian firm imports from China, say a solar panel, and exports to the US as its Indian goods. That is illegal and it will violate US rules of origin, and that firm may be punishable with fines and other things. So that's the path which many will be taking. I'm in touch. I'm aware of those things, but that is not the legal path. But nevertheless, it's not only India. World over, rogue firms are there. They will do this. Second stream is anti-dumping duties. When China has so much surplus, it can't sell to the US. It will try to sell those things at cheaper price in not only India but most of the South Asian countries and other countries. That of course is a regular phenomenon. It's nothing new about this. We have an organization called Directorate General of Trade Remedies. They watch this. So we will see some sort of imports on that count. Third, which is valuable and that will generate a lot of business for everyone, is this. People will bring intermediates and raw material from China and finish in their own countries. And so new value chains will develop between say India and China and most other countries. And that value chain will be beneficial for the business. It will be creating jobs. Of course, everything depends on Trump when he is going to change the tariffs again. If this continues for some time, this will happen. So now one question is whether any deep manufacturing will happen out of this. No, because if I'm an investor, I will not be putting my billions of dollars on deep manufacturing because I don't know. Trump is very uncertain person. And so I'll wait for that. What I'll do is I'll do superficial manufacturing, which means I'll bring intermediates, penultimate products from China, do manufacturing in India, and then export here and there into the US. So these three streams, I'm in touch with people. People are working on all these three streams, and the third stream will be beneficial for all the countries.
So, what you're saying is the most likely option that Indian companies will exercise is to become an assembler of products by importing cheap intermediates from China. But two questions here. One, it doesn't basically raise the inherent base of Indian industry of skills, competitiveness. Second, the US is going to be very smart on this. So the rules of origin they can tighten. So this route may also be shut down, right?
You are right. The first thing is that we as a country, we are a high cost of production country. So those are fundamental reforms that are needed in power sector, capital sector, land sector, plug and play, and all those things. Then sectoral reforms are needed. Until we do that, we can't do deep manufacturing. We can't. There are very few things we start from the raw material stage. Else, all the new things like machinery or electronics, we buy intermediates from here and there, and then assemble, add some value, and then export. So, but I totally agree. India should become a deep value creation country, and we should focus on those things. But that will require deep reforms, which we talk, but we rarely take any action on ground. And second point you said about US, it will be illegal. Suppose Chinese content. Of course, US has a rule called non-preferential rules of origin. This applies to goods which are traded between two countries which are not FTA partners. So, for example, India and US, they are currently not the FTA partner. So, the rule will say unless the intermediates imported say from China, they are substantially processed in India, then it is not an Indian product. And then US will charge the Chinese duty, the 250% tariff, not the 10% tariff. That of course is there. That's why people in India, Indian firms who wants to use this route, short-term route, they have to ensure that it meets the substantial transformation criteria. They cannot just bring things from China and export to the US by by adding some packaging material or doing some superficial processing. It has to be deep processing, substantial transformation of the product. Then only it will be beneficial.
So I'm curious, will that also impact PLI? Because the Apple phone is still largely assembled in India. It is not produced here from scratch.
So, components, they are different things. And when you make a mobile phone, it is a totally different product. So, even though valuation is less, we say there is no semblance. I mean, it makes different product. So my first impression is that it may escape US law.
So Ajay, you made a very important point that basically every Indian industry is exploring shortcut options to work around this tariff situation right now. But implicit in what you said is that it does not help in improving India's skill sets or its ability to move up a value chain. It is basically going to be still stuck at the low hanging fruit. So it's a short run fix if it succeeds, but a long run challenge.
I agree with you, but very few people are there. Many rogue elements are there in all countries. It's not about India, it's about all countries, where some firms will be operating at the borderline of the law, but most of the businessmen will not do it. They will go for genuine value addition. For example, they want to import intermediates from China, do substantial processing, and then export to US and other countries. So that's what accounts for the most businesses. And that business at a very deeper level, I mean, doing deeper validation starting from raw material, that takes time, billions of dollars of investment. Trump tariffs, the way they are, they may not be there after a few months. So short-term opportunity is there, and people will invest less in superficial manufacturing type of things and gain maximum in this short term, because deep manufacturing takes time.
So why are you so hopeful these Trump tariffs will be withdrawn in a few months?
Oh, I am guessing, you know, now the momentum has changed. Now it was Trump doing whatever he wanted to do. But for the past at least 15 days, I think moment direction has changed, and that those small feelers are coming, that he's being opposed by his own officers, stock markets are not supporting him, many countries they are joining hands, dollar is under pressure, bond market misperformed, that's why he was forced to withdraw countries with tariff. All these things, they tell me that direction of the momentum of and direction both have changed. Now Trump will have to renege, and soon he may have to do course correction in a very big way, bringing world economy towards normal side.
Okay, but I guess the face off with China will continue because that is also strategic in nature.
I don't know. That is, US is talking about US China strategic nature. It's not only Trump. Before Trump, it's being talked for long. But we never know. US is so much dependent on China for everything. China is world's biggest producer, and they're the biggest buyers. And so they have to be dependent on China. Despite all this trade war, they continue buying from China directly or indirectly. So I don't think I mean, they may keep on talking. China is a rival, but it's a multipolar world now. See, till Russian Federation, I mean Soviet Union was disintegrated. It was a bipolar world, US and Russia. Then after the Russian Federation dissolved, it was unipolar world run by America only. But now we can see it's not bipolar, it's almost a multipolar world, which America is not comfortable. They will soon recognize that they have to act, they should not act funny most of the time.
Ajay, I want to put the spotlight on one of the factors which is impeding the competitiveness of Indian industry. One, we have logistic cost, we have red tape, all this is fine. At the same time, you also have this challenge of intermediate import tariffs. I think it's been discussed forever, but import tariffs on intermediate products in India continue to be high, even when you compare it to peer countries like Vietnam, etc. So, what is the way forward? Can this be fixed?
So, import on intermediates is high on select products which some of the large industrial houses make. Otherwise, the tariffs are not high, and tariffs on intermediate products are basically in the range of 7.5% to 10%. That accounts for 80% of the intermediate products. So it's not high for me. For certain products, we want to help certain large industries. That's why they are high. Having said this, I know that our tariffs are on the higher side, but I don't say, and it should be reviewed thoroughly. We have never reviewed them in the past 25 years. There is a revision very much needed, sectoral, but it should not be done under duress because Trump pressure is there or some other pressure is there. But a clean, objective look at the tariff is very much needed in India.
Raj, I'm curious, you are a former DGFT, so you're an insider as far as trade goes in government. So what is the inside track on why this review has not been undertaken for 25 years?
I think people who are responsible for this review, they are busy with the bigger things, more urgent things.
Okay, so nobody was looking at long term, is what you're
Yes,
saying.
yes.
Everyone is looking at a short term fix.
You're right.
But isn't it true that now India can no longer kick the can down the road? That this option has gone out of the window given the current circumstances and looking ahead? Even if Trump walks back his tariffs, we won't go back to normalcy. We are going to live in a new normal. So, is this, I mean, the final call for India to fix all these problems?
Now, whenever such things come and such pressure, they do keep on coming in every once or twice in few years. So I don't see that India should take any pressure from Trump. You know, we'll be laughing about current period after a few years that this weird person was forcing everybody else, and we'll not be happy the way we behaved. We should not surrender to Trump. We should do whatever is great for the country in the long term. Short termism, we should never think. We are a big country. We are the large economy, fifth largest, going to be third largest soon. We should take actions only which benefit India in the long run. We should not take any pressure from the Trump. We should offer him a solution that we should offer him tariff-free exports of US goods into India on 90% of the industrial products, no agriculture, no auto. If he takes it, it's fine. If he doesn't take it, he can have his way. It's not a physical war. It's not a bomb. Nobody is bombing us. It's a stupid trade war. We can survive that.
Okay. So Ajay, I want to take you back to the China problem in India's future. India has frictions with China. We have still not got over the border skirmish, which is still ongoing. Both troops are lined up on either side of the border. In northeast, in Arunachal, there are stress lines. So there is an underlying military or a confrontation going on. And on top of that, you have this trade issue which has cropped up. And like we discussed, their domination of global trade is incredible, China. So I want to put the spotlight on one item, which is electric vehicles and green minerals. In green minerals, they account for 90% of the processing of green minerals. India needs them to step up its EV manufacturing or realize all these objectives, including phones and all these elements. So how does India manage this dilemma? You know, we hate China or we don't like China, but we also want China.
So I was thinking, Anil, that we are dealing with two Chinas. One at the political level, where we have a lot of problems. Another at the import-export level, where we need them badly. And whatever problems, even during Galwan, were there with political China, this trade continued to grow and grow and grow. Basically, imports continued to grow and grow and grow. And so that's why our deficit is all-time high at almost $100 billion. And talking about your EVs and green minerals, you know, it's not India's problem alone, whole of the world. Chinese were very prescient, they were very calculative, and I love them for this. From late 80s, they recognized that there will be something called green energy, there will be something called EVs. They invested, they bought mines all over the world, from Australia to Congo to Chile, everywhere they bought the mines, and they control about 50-60% of mineral resources, critical mineral resources, but processing, as you rightly say, 80 to 90% has to be with them. Some minerals which we have, we can't process that. I have to send it to China. So hats off to them. We will have to suffer for that. Other countries also, China, this US, European Union, everybody is in our space only. We are not the only foolish country, and everybody is suffering. So China is saying they will restrict the supplies. Of course, they are in their rights. When you are saying so much, they will have to respond to this, and India has to suffer in that process. So we have to pay for our foolishness that we didn't plan. We could not see the future ahead. So countries have to pay. We'll also pay.
So then, but what is the option? Because India will have to suffer this economic pressure if they choose to exercise it, like they're doing with the United States. But we are at a very critical part of India's growth story. We're trying to get onto a new growth trajectory. You're trying to, improve the plumbing in the economy. You're doing many, many things. You have managed to eradicate abject poverty, but we are still very early in the process. So how does India deal with this? What do you suggest?
So some things where our critical dependence on China is very much, I think we should not worry. For example, electric vehicles. So why we need electric vehicles in a country where 80% of the power comes from the dirty fuel, fossil fuel like coal and petroleum? Ultimately, that power will be used to charge the EV batteries. That means we are shifting pollution from point A to point B. So I don't think we need EVs, and I have studied EVs close enough, talked to several manufacturers, suppliers. It can at best be the second vehicle for anybody, and not everybody can afford to have vehicle. Every 5 years you have to change the battery, and that cost is 50-60% of the vehicle. EV will never be a success in India. That's why my thinking is that government should not subsidize EV at all. If it makes on its own, it's fine. If it has a business case, why should government subsidize EVs? And if we subsidize EVs, we'll be subsidizing manufacturing of in China only, not in India, because everything is being imported from China. The EV making companies, they don't admit all these things, but if you see the deep, all the battery minerals, everything comes from China.
So finally, what you're saying is that in this current situation, as you very nicely described, there's a political China and there's an economic China, and you are hopeful that India can manage the economics, if not the politics.
I'm sure government is in position to manage both the politics and the economics, but we talk a lot about the reforms. There are many products where technology is not an issue. We have the technology, but we don't make them. This is a time to look inside our workshops at the IITs, at other engineering colleges, and reverse engineer many things. And we should become a great manufacturing nation. We only talk about becoming one, but we are not taking sufficient steps. We are not reforming those things. Sectoral issues are there. Everybody knows about those issues. So it's the time to resolve. Instead of talking about superficial manufacturing, we should talk about deep manufacturing. We will be outpriced by China, of course, by a certain percentage. But the way things are, it's fine with us. Even if we are making slightly expensive things, we may be making cost-effective things after 5 years. That's what China did. They were no good in solar panel. They were no good in EV batteries. They gradually became number one. So every country has to do that, take that path. We have to take that path. We have not taken. We are talking more, doing less.
Thank you, Ajay. That's a great point to sign off on. And you heard Ajay. He's very candidly laid out before us that yes, we do have a problem as far as economics go with China. Let's leave politics out of it for the moment. But there are no shortcuts. He has one by one eliminated all the shortcuts that Indian industry may explore to make quick profits in these circumstances. He says there's no other option but to walk the talk on deep reforms, which India has been mulling over for over 2 decades now. For some reason, we've been kicking the can down the road, but now the clock is ticking. Thank you for watching. Don't forget to subscribe to StratNewsGlobal.Tech on YouTube. Hit the bell icon so that you don't miss any updates. And please to share your thoughts, ideas, and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.